Okay, so stocks are mostly down this week as the market is losing momentum, and we see this clearly by looking at this picture over here, this heat map. Now, all of our major indices are losing important support levels, and it seems the sentiment is turning bearish again. But the real question is, as the indices are already falling, how low can we go from here? Apparently, the market is frustrating all attempts of a bullish reversal, but we can find very important clues about what to expect next if we look closely at these charts over here. So let's take a look. Welcome to the Finance Hydra channel. My name is Nathan. Let's start our analysis over here looking at the S&P index. Well, the S&P lost the 21 EMA. The 21 exponential moving average, we lost the 4078, which was a previous top level over here from March 6 this year, right? This top level did work as a support level 1, 2, 3 times. Right now, we are losing this key point as well. So we are losing the 21 EMA along with the 4078. This is not good. It means that, okay, now the S&P is trying to seek its next support level, which is 4039, this red line over here. Keep this key point in mind because we're gonna get back to it later. The Nasdaq Composite Index is already losing the 21 EMA. We lost the previous support level over here as well. And it feels like we are triggering a double top chart pattern. We see an open gap over here, and it feels like the Nasdaq Composite is trying to fill it right now, and this is our next support level to work with. We see the Dow Jones clearly crashing, right? Seeing the Dow Jones dropping -1% and then -0.73%, it feels like it is not that much, but look at the size of these candles over here. We are clearly losing the 21 EMA, and although we don't see any crystal clear support level to work with right now, it feels like there is no hope for it. We don't see any meaningful bullish reaction on the Dow Jones Index so far. Now, Russell 2000, it is trying to trigger a double top chart pattern over here, right? By losing the key point at 172 area, we are triggering a double top chart pattern, but unlike the Nasdaq index, which is triggering at a top area over here because it was already going up nicely, Russell 2000, it is doing a top signal, a double top chart pattern, while it is already crashing, while it is already bearish. And this makes me wonder if we are going to try to retest the 167 over here. Now, keep these key points in mind because they're going to be very important later. Another thing that reinforces the bearish sentiment on the broad market is the fear index VIX. VIX is just spiking, and it is spiking at a very good time because we just reached a very important support level from January last year. We hit the support area, and right now we are bouncing sharply, we are bouncing strongly. It feels like we could easily try to retest higher resistance levels like the 25 or even the 30 points area up here, doing a very strong V-shaped recovery, or even possibly, there is a small possibility, but we must work with it. There is a small possibility that it is going to try to trigger an inverse head and shoulders as well. Just like, coincidence or not, just like the dollar index is doing right now at this moment. By doing this inverse head and shoulders over here, it is a very strong indicator that investors are quite nervous about the broad market and they are trying to seek safe havens like the dollar. So seeing the dollar index on the verge of triggering an inverse head and shoulders is quite problematic for the broad market. In addition to all of this, we see yields, the 10-year yields doing a bottom signal above a support area, this blue line over here. So we see many problematic signals around, and then this makes me wonder, well, so how low could the S&P go from here? Well, as I told you guys, the support area, the next support area is 4039. And this 4039 area is quite important because it is very close to the first retracement area over here, the first Fibonacci's retracement at 38.2% over here, which is around 4030 as well. In addition to all of this, keep in mind, the S&P is bullish. We triggered a classic golden cross pattern over here. The 50-period moving average did an upwards breakout from the 200 moving average over here. Therefore, there was a golden cross. There is no deny on that. Now, we are losing momentum, but it feels like we could easily retest the 50-period moving average as well. And guess what? The 50-period moving average is around 40.33. Therefore, this entire area between 40.39 and 40.30 over here is a triple support level to work with on the index right now. In my humble opinion, any bullish reaction above this triple support level might be a very good opportunity to buy because, as I told you guys, the index is still bullish, is still in a bull trend. We did a golden cross. Now, it could be a buy opportunity. However, if we lose this triple support level, then okay, then we're gonna keep bearish. Then probably we're gonna crash to much lower levels, maybe the 200 moving average or even the 61.8% Fibonacci's retracement, losing the 4K area, the very important psychological point, 4K area. Now, the Nasdaq Composite is struggling around the 50-period moving average. We see a golden cross pattern over here as well. And then, if we use Fibonacci over here, we see that this area is also particularly close to the 38.2% Fibonacci's retracement. Therefore, we see a very strong triple support level in this area over here. And it is not going to be that easy for the Nasdaq Composite to lose this area right now, in my humble opinion. Therefore, if the Nasdaq is about to react, now the timing couldn't be better. The Dow Jones Index is also trying to correct to its 50-period moving average. And again, it is very close to the 38.2% Fibonacci's retracement. Therefore, if you ask me, the Dow Jones still could drop more, 0.7% until it hits its next technical support level. The Nasdaq Index already hit its support level, but it still could drop more, 0.76% a second time, while the S&P Index could drop more, 0.64% until it hits its triple support level. Therefore, there is still more downside left. But the real question is, if we see a bottom signal in this area, is this going to be an opportunity to buy? Or will the S&P and the other indices just bounce to higher levels before losing this triple support level, again, re-engaging a very strong bearish momentum? Well, we don't know that yet, but of course, I'm gonna keep you guys updated every single day on my premium newsletters. Therefore, it is very important for you to subscribe to my newsletters. Take a look at my website. The link is in the description of this video. And remember to subscribe this channel, because if you don't, you're gonna lose my future content. And of course, click on the like button if you liked the video so far. Thank you very much for your audience, my dear friends. See you guys tomorrow. Stay safe. Bye bye.